Hello, everyone, and welcome back to the Self Storage Podcast. I'm your host, Scott Meyers, and in the studio today we have my good friend Josh Stech. Josh, welcome to the Self Storage Podcast.
Thanks for having me, Scott. Great to see you.
Great to see you as well. So, gang, for the record here, I have known Josh for about five or 6 years now, as he and I are in a real estate mastermind together. But I've known his dad for about 20 years, and I probably can go so far as to say his dad's a legend in learning how to raise a private equity. And Josh is, well, apples don't fall too far from the tree, and has just taken what his dad has created and what he's learned from him and gone on to do the exact same thing. And so that's really what I wanted to talk about, to share with the folks today, is a little bit about your journey, Josh, and then we'll get into the specifics of Sundae and some of the other businesses that you've created, bought, sold, and what you're growing right now. So with that, the floor is yours.
Awesome. Well, yeah, thanks again for having me. I'm really excited to share a little bit more about some of the things I've learned along the way. I certainly don't know it all, but I've learned a few things and I'm happy to share, and I'm looking to learn more. Just by way of quick background, I started my career off fixing and flipping homes in Las Vegas just after graduating from Stanford grad school, which was a little bit of an unusual path, but I think the entrepreneurial bug was always a bit in my ear with my dad. And so learned how to fix and flip, realized that lending was a lot more scalable and frankly, a lot more fun. Transitioned into a company doing that with my dad, actually a fund that we raised, and then parlayed that experience into my first technology business, which was called Lending Home, which now is called Kiavi, which is the largest private lender in the country, although institutionalized, doing, between 700 and 900 million of loans a month, somewhere in that range. And that was a really great experience, starting from, nothing and scaling it up to a very big business. And then, Sundae is what I'm focused on today. And I'd love to talk a little bit more about how we're bringing, I think, more of a process and standards and sort of rules of engagement to the off-market real estate space that don't exist, and that I think create kind of bad outcomes for people. But that's a little bit about me.
So let's dive into that a little bit. Obviously, you had a huge platform and grew both those platforms to quite a large scale. Tell me where Sundae fits in, and truly, what is the niche that you were looking for, and how did that fit in? How and why was there a need for another company to do something different than what the others were already filling in the marketplace?
Yeah. Well, but with Lending Home, we solved at the time what was the investor's number one need, and it was access to capital. It was a very nascent market. It wasn't institutionalized. So it was really who you knew, and you were lucky if you could find somebody to give you capital at cheaper than 15 or something absurd like that, which sounds absurd now, but back in the day, it was like, yeah, sure. How much can I get? So that was the number one need. But what happened as we got further and further from the great financial crisis was that inventory, access to good deals, became an investor's number one need. And that was really where I wanted to go with a business. I wanted to continue following an investor along their journey of making it easier to be an investor. Again, that's where I started my career. It's near and dear to my heart. The types of small businesses, family-run businesses, the legacy component to property investing is something that I really love, and is something I've experienced firsthand the power of. And I wanted to do more of that. So the Sundae was created to solve the problem that finding off-market deals consistently and in a way that doesn't totally gouge and take advantage of the seller seemed to be a problem that needed to be solved. So we created a marketplace where we go and we try to identify sellers that need a different selling experience than the MLS, but shouldn't be subject to just one offer from one person at one low price, but in fact should get multiple offers from multiple people with hopefully a competitive dynamic that still leaves enough meat on the bone for the investor to make money, but that creates a win-win for them and the seller. So that's kind of where Sundae sits, is in the middle of that transaction. And then we've created, a few divisions around that, like, a lending company, an escrow company to kind of service that transaction.
Well, then let's walk through that customer journey. What does it look like when somebody reaches out to Sundae? Let's get into some of the details. Yeah. What are the first steps?
Yeah, the first step, we've been big believers in meeting in person. This is someone's largest financial asset. There's a lot of emotion tied up in it. Depending on the reason for selling off market, you and I both know, it can get very emotional. It can be inheritance. It can be that there was a death in the family that may be more of a widower situation. It can be financial distress. So in my mind, knowing who you're doing business with is always important. But in that situation, knowing who's really going to take care of you comes down to a face-to-face interaction. So for us, it's a seller calls in, we do some lightweight qualification, explain the experience, but we are trying to get into the home to tell them that, we are the right brand and this is the right process. And, from there, it's packaging their home up to be ready for the marketplace. So it's we'll most of the time do an inspection. We're looking at 3D walkthroughs almost all the time, really good comprehensive pictures, seller disclosures ahead of time, the kinds of things that investors are going to need to be comfortable bidding sight unseen. Because one thing we did want to avoid is these kind of cattle call situations where you're bringing in 50 investors and the homeowner wasn't expecting it. We really needed to be, if we were going to change the game and become a household name, establish a process that was transparent that we could stick to every time. So we don't do property showings most of the time unless the seller's open to it. It's really mostly packaging enough information to get bidders comfortable bidding sight unseen. And then the final kind of piece I'll note is investors are often going through like a 2-round process in the auction. The first is competing with everyone else to become a top 3. And then we move those top 3 into a round 2, which is a highest and best offer round. And it's done automatically on the site. And that's our way of trying to get, the best price that we can out of the transaction.
Well, obviously, this has been received very well in the marketplace, and I don't want to put words in your mouth to say that you've blown past some of the milestones that you set for yourself, but pretty safe to say that, we've been sharing along with your success in the mastermind with this as well. What would you say along the way that you've been most proud of? And is there anything that surprised you along the way as to from where you began to where you are now with Sundae?
Yeah. The most proud of would probably be just doing our best to stick to the mission. I mean, there are a lot of things I think day to day that cause us to want to, be a little bit more profitable, make a little bit more money, kind of take the shortcut, the easy way out. And I think a lot of people do get pulled into that game. There's the great way with real estate. The great thing about real estate is there's 1,000 ways that you can profit and make money. And that's the bad thing. If you lose focus, if you get distracted, I do think we've stayed very focused. And I think that's been something I'm very proud of. We also attracted the attention of just some really, smart people who I think have a very high bar on the kinds of things that they get behind. And I don't know, I fully expected. That was kind of a surprise. Names like Dr. Phil, who's become a spokesperson for the company, and then just some of our largest investors that have, backed the company, some of the largest public company real estate firms that have backed us in our vision. So that's been kind of really unexpected, I'd say.
Well, none of this happened without obviously good people to be able to march out a plan. But
Right.
First and foremost, we all know that this is a process-based business, period. I mean, for everything that you just mentioned, there are literally hundreds of steps and ways that you can take this and over 100 steps in getting from A to B in a transaction. And so it was key to have those all of those processes in place. And I know you're a big SOP guy. So now that
Yeah.
you've got those nailed down, what's next for expansion? I mean,
Yeah.
is this something that you're looking to open up shop, expand upon? And if so, what does that look like and how do you achieve that?
Yeah. I think when I look ahead towards this year and the things that we're going to prioritize, the thing I'm most excited about is offering what we've built that to date has only been something that joining the company as a full-time team member could allow you to benefit from. So, if you like the Sundae brand, if you like the kind of the way we go about business, the product offering we have, the technology stack, the brand endorsements from the Dr. Phil's of the world, if you like all that, to join as a full-time team member in order to be part of it. And I think we realized that was a shortcoming in the model because there's so many entrepreneurs that are in cities that we don't yet serve that could take our brand and our tech and our advertising and steward it in a phenomenal way. So we are looking for those opportunities to partner through sort of a membership agreement with individual operators who, again, want a bit of what we have and can take it to the next level. So we're looking for those relationships and launching a few new markets even on April 1. We'll be in Oklahoma City and we'll be in Salt Lake City. And there's a pretty good chance that we're in 1 or 2 more by April 1, which is just a few weeks away. So we actually have our first couple of early adopters that are coming into this program. And I'm really excited. This could be the way that we finally get Sundae to become a household name in the US.
So who's your avatar for that? Who are those clients that you're seeking out to? Are these folks that are already in the business and have, deal flow coming in? Are these individual, investors or are these agency type relationships that they're now hanging the Sundae brand on? Tell me who that looks like, who you're seeking and who should be seeking out you.
Yes. Yeah. So I think the way we've characterized it is, I think there are some opportunities out there, whether it's franchise opportunities or software that can help people kind of get comfortable going from 0 to 1 and learning the business and getting off of a cold start. That's not, what we have That's not what we have in mind. I think what we have is really the add a zero to an existing operation that is already successful, that is kind of understands their own limitations and maybe even sees a bit of what's to come in the future around, I think that more national scale brands that have better online presence, better online reviews, that are just generally more active and have more good things to say, more articles published. Those are the ones that are going to be, I think, increasingly recommended in some of these AI search platforms. And there's going to be less sponsorship pay for play opportunities. So again, if it's an existing operator that's doing 20, 30, 40 transactions a year and wants to add a zero to that in a pretty short period of time, that's really our ideal customer profile.
Well, I think the idea has been always, not for everybody, but for us, it's always been to scale and roll up and then be able to sell at some point to a larger owner operator, an institutional buyer, no matter what that is and what our portfolio looks like, whether it's small chunks, big chunks. And I'm not saying that's the same and that's a recipe for success for everybody, but to me, Josh, it seems like it's almost a necessity now. I think you are going to fall behind with the onset of AI, but then also I see just an accelerated pace of that model, which seems like anybody that's getting into the real estate space of any sort, whether it's on the financing side, whether it's on the physical side, or even a wholesaler, somebody's just trading paper back and forth. I think to be doing it at scale and you have those processes down and you've got to have a complete suite and a package right out of the gate, or it's going to be hard to compete if you just want to be on your own or do this on your own. What are you seeing on your end? I mean, we see that in self-storage again, because that's also what we teach at our mastermind and for our folks to say, hey, here's the goal ultimately, whether you want to keep it or not, get a portfolio and you can refinance it if you'd like. But, the bigger pot at the end is if you continue to grow and scale this thing to something that a larger group of individuals are going to want to take a big bite of. So are you seeing an accelerated pace on your end as well?
Yeah, I would agree with that. And, I think what's interesting about the property investment space is there really hasn't been, one standout breakout player who's really kind of become the household name like there are in so many other categories of business. We look at even an individual city and see that the market share within an individual city is usually not more than 10 or 12% and to the number one player in a given city in property investment. And you look at the top 50 in a city and it's usually no more than 25%. And that kind of fragmentation is actually what drives a lot of inefficiency. And you got hundreds of people in a given market that are all doing overlap advertising in different brands with slightly similar messages. It confuses the customer. It creates a lot of inefficiency in a system. And, you never want to get to a monopoly situation, and I don't think we will, but we're so far from that in property investment that we need to take some significant strides towards consolidation, because it will create a more balanced outcome for both the seller and for the buyer. And even though I think Open Door and what they tried to do scared a lot of people, I think that everyone realized just how hard it is to be a property investor at scale. I think the solution moving forward is not that everyone buying these homes, nor that they're doing something, I think, as kind of opaque as wholesaling, but that there is actually a model in between that's a lot like eBay for houses. And it's, hey, there is a transparent way that is maybe more regulated. I think we're seeing I think regulation is going to contribute to a lot of consolidation, because the more regulation that comes in, the harder it is for smaller operations that don't have the budget and don't have the software tools to compete and stay above board. So that's one thing I'm curious to see, and hopefully we're going to be part of the center of that conversation, is in the next 2 or 3 years, how can we start driving more conversation around transparency, fairness to both buyers and sellers? Because by the way, a lot of buyers that are buying from intermediaries like wholesalers are also getting, bad information, the wrong end of the deal. Yeah. And so I think we can standardize that, how these things buy and sell. And I think that will actually lead to more consolidation.
So in the next 2 to 3 years, or let's push it out to 4 to 5, what would you like the landscape to look like, and what does Sundae look like at that point?
Oh boy, I think we spent 6 years building the brand and the advertising platform, and then the operational back end to take interested sellers and move them through a really good, enjoyable process to get them to a solid result that they're happy about, that hopefully they want to talk about it and share with other people. So we have that, and we spent 6 years and 9 figures. I mean, well over $100 million building that. Now, why can I say that? Well, because we've raised $165 million. So, we've raised a lot of venture capital, and not a lot of people understand why you do that, but it is to build a platform that is going to be ready for scale. Now, it's not a thing that happens overnight. I think we often, as consumers, start interacting with venture capital companies in their inflection moment, and so it looks like it happens fast to us. But Airbnbs, they're around 15, 16 years before they go public. So I think that what we've been doing for 6 years, that for us has felt like a long time in a grind. I think it's going to start looking like, oh my goodness, they came out of nowhere, but it's been a lot of thoughtful effort. So I'm hoping that 5 years from now, Sundae is in every major US city. I think we'll be still domestic. I don't think we'll be international, but I do see, I was speaking to a private lender the other day, a very large one, who has actually found success expanding overseas into the UK, into Australia. And that opened my mind to, of course, this is an international problem. Of course, real estate is one of the most, I mean, maybe it is the most ubiquitous asset in there. So I think we're still domestic, but I hope we're in every major city. And I hope that, legislation is looking to us as the right way to do it, the standard. That would be a great outcome in 5 years.
And from what you built and the reputation that from your dad's companies, from the ones that you've started, I see that as an opportunity definitely for you. And this is something that I've been utilizing my platform for, is I would like to drive and help to shape that regulation that we know is coming down the pike anyways, because if we don't have a say in it, we're not going to like what we see. And we're not going to like the rules in which we're going to be forced to play by. And as long as there's bad actors out there and nobody in our community self-polices that, then that is a recipe for disaster. And we have the ability and the opportunity, because nobody wants to step in and do that until they have to.
Yes.
And so I think that's a fair strategy.
Yep.
That also plays into, I mean, I know your dad had a piece of the Be the Bank. Is that right? The Be the Bank events for years, where you guys have been teaching people how to go out and raise private equity and looking at the money side of this. How is that going? And is that still feed into what you're doing at Sundae? Are they completely separate? Is it an adjunct? Do you still receive benefit out of that helps your other companies? Or do you just like getting on stage and teaching people about the business and seeing their success?
That's the primary driver for sure. I mean, my dad and I started our private lending business now 17 years ago. And that was purpose-built investments. And that company has done well over 10,000 loans, which pales in comparison, of course, to what we managed to do at Lending Home, my founding team and I over there. But that's where we built our legacy. I mean, that is where out of the zero, we created a profitable, scalable situation for ourselves. We really love private lending. So one day, somebody that my dad was interacting with was a dentist who had just sold his practice for 8 figures. I mean, he had a really good outcome, didn't trust the stock market, like a lot of us don't, didn't oil and gas or precious metals, but definitely understood real estate, had owned a lot of it, and had heard about, people that were lending on it, had a self-directed IRA. So had seen some educational stuff on private lending, just said, I don't know where to start. And that was actually what caused my dad and I to start Just Be the Bank. And that's a 2.5-day workshop. We've now done over 20 of those and educated over 500 people, teaching already successful high net worths who want to learn how to, make double-digit returns and beat kind of Wall Street at their own game. We teach them how to do that over a 2.5-day course. And then we spend about a year afterwards helping them implement, and whether they want to get to 10 or 20 loans a year to just deploy their own money, or they want to actually take it to the next level and syndicate and have a fund, we can do everything in between.
Well, Josh, that is an incredible legacy that you guys have built. And I just wanted to add on to that. I know Dave and I, your dad and I, were just chatting, I think it was about 3 weeks ago. And I know you've got a big event coming up. And forgive me, I've forgotten the exact words of the mantra, which is work hard, have fun, and give back. Or what is that exactly?
Make money, have fun, do good.
Yeah. Okay. And so we focus on the do good part. And that's why he reached out to me, because after our conversations in our other mastermind and talking about our house builds that we do down in Ensenada, Mexico, and partnering with YWAM, he thought that was a good idea to look at doing something like that. So, tell me a little bit about, what is that like? Tell us how you and your family think about giving back and the community impact that is one of the 3 pillars of what you plan to do in all of your ventures.
Yeah. Well, this mantra that's kind of become one of a few that we organize around and kind of try to bucket our time around as best we can is, making money, having fun, doing good. And really in that order, I think, because making money, it comes first. You can augment how much fun you can have and how much good you can do. Of course, the more that you have. At some point, though, it has to become that those things come into the equation. And for us, we've made enough in the money category, and we really have been focused on the other 2. I think the having fun is second, because I think that it's hard to, I think, show up your best with others if you don't feel good and enjoy yourself and what you do every day. So I think, balancing the money with the fun, I think creates this financial capability and this sort of like soul capability to then go do good and do it in your authentic self with enough money to make a big difference. So
Hmm.
that's kind of the order we do it in. But yeah, my dad is increasingly, in his 70s now, spending so much time on the do good side, whether it's Aerial Recovery, which is a great nonprofit that we supported for a while, that's, helping with the child trafficking issue. That's something that we're very passionate
Hmm.
about. We think it's a huge problem. Or it's, housing, because it's been so much
Hmm.
our experience and,
Hmm.
the doing good part. And that's where I think your nonprofit came in. And we just
Hmm.
had an event in Huntington Beach. We presented it to the group. And I can think if there were at least 240 people present or on live stream. And I can't think
Hmm.
that maybe one wasn't interested in doing that together. So yeah, we're
Hmm.
grateful to partner with you on that.
Hmm. Well, I'm looking forward to that as well. And, I think as we grow older, there's no shortage of things to do that are fun. But I think that focus begins to shift a little bit more into do good when we either recognize that we have a responsibility and we're being obedient, depending upon what you believe. Everybody on this podcast knows that I'm obedient to my maker when that comes. But I think that what we think in the having fun part is happiness. But what we're really seeking is joy. And the happiness of having fun and having things only lasts so much. And the joy is lasting. And that joy comes from the giving back part. And
It
so,
does.
I think eventually when people start to do that, you realize, hey, this lasts a little longer than, the car, the vacation, everything else, even though there's memories and what have you, but you get it. And so, you can sense that in your dad. I think he recognizes that as well. And you and I have had those discussions too. And we see, with our groups and the folks around us as we've done the money part, had a lot of fun with some of the other things and have the things. The joy part is what we seek more because that actually is more fun.
It is. You're right. Yeah, actually, I haven't thought about it, I guess, in the way you just said, that the last two are just so intrinsically linked. I do think that if you look
Yeah.
at them separately, you tend to solve for them independently. The giving back is definitely the most fun part of life. I mean, there's no doubt about it.
Hmm.
And I don't think you
Hmm.
really appreciate that until you're able to do enough of it.
Yeah.
And, you know, for those that have kids on the call, I do. I have three kids under 10, and exposing them to that lesson earlier in
Hmm.
life would be a huge
Hmm.
priority for me, because, when we were growing up, we had enough, but, my dad, and he'll admit, he found success a bit later in life. And it was fun for
Hmm.
me to kind of experience that with him, and maybe even got on that ride together in a lot of ways. But when we were growing up, it was really like, we have enough, but boy, doing good and like being able to do it at scale was not a thing that we prioritized. So now I feel
Hmm.
fortunate to be in the position to do that. And I got to expose that to my kids soon.
Yeah. Well, it doesn't matter where you live, what your zip code is here in the US. If you live in the US, you're already in, the 1% or the 2% compared to most of the rest of the world out there. And so that was a huge lesson for our kids the first time that we went on a house build trip. We went as a guest of somebody else's, which is now what we do, is we offer that to other folks to do as well. And to say it was life changing, yeah, it was. I mean, our family was wrecked to be able to see how other people live and then to be able to provide them a house so they're not sleeping on a dirt floor, which meant that they're healthy and they could actually go out and do their schoolwork and actually work all day long without getting sick.
Wow.
You just don't realize those things. And all the other ways and means that we can give back. My daughter is also very passionate about trafficking. So when you realize that we do somewhat live in a bubble, and you just once we get out of it and you go and see how other people live around the rest of the world, to be able to give back, just that is more meaningful and impactful. And the sooner you can do it, as you said, with your kids, they'll remember that. And that those times when they are in want, which they'll go through on their own in life, at some point they recognize, okay, I can do something about this, and it's not so bad. Because I remember when we were over there and those folks had joy when they had nothing. And so it truly is it's a very helpful piece in their journey of self-awareness.
Yeah, the gift of perspective for sure.
Yeah, 100%. Well, Josh, I want to be mindful of your time and just appreciate catching up with you once again, this time on camera, so that I can share you with Self Storage Nation and what you built here. So with that, how can people get in touch with you? And is there anything else that you want to talk about coming up that people should keep an eye out for?
Yes. If you're interested at all in bringing Sundae to your local market and think it could be a fit, I know it's not self-storage exactly, but even if this is an interesting opportunity to maybe diversify your company portfolio, or if this is something you or a friend or a child does that, you think could benefit from, shoot me an email at membership@sundae.com, membership@sundae.com. And on the flip side, on the Just Be the Bank side of things, that's something we're really excited to share with more people that I do think could be a great fit for your
Absolutely.
listeners. And for that, we've set something up at justbethebank.com/Scott. So justbethebank.com/Scott. And there's a couple things in there that we pulled from what we call our legacy library. So a couple PDFs on just how to get started. If you don't want to go through a full workshop, what are the basics? How do you get started in private lending? We have 3 PDFs on that I think you'll find valuable. There's another PDF in there on just doing fewer, bigger deals with fewer, better people through fewer, deep relationships, one of our other mantras in our family office. And then there's an invitation to some of our webinars, which are more educational around what's going on in the housing market. What's the future look like? So I would love to offer that to your listeners.
Awesome. I appreciate that, Josh. And we will put all of that in the show notes. And I'm looking forward to hopefully having some of our folks so that they can learn from you and your dad at those live events. And there's always self-storage is just one arrow in the quiver. So we have an awful lot of folks that are in multiple asset classes in real estate that are practitioners of all forms. So guys, you need to take advantage of that from the guys in the business that are doing it better than anybody else. And I can say that with 100% confidence. All right. So Josh, as we end here, one other thing I'd like to ask is what is the best piece of advice ever received?
Oh boy. I tend to seek out advice. I really do think that, if you see farther in life, it's because you've stood on the shoulders of giants, people that have seen around the corner. So why the heck not, learn from them. But so there are a lot. So this is one of the top for sure, maybe the top, but I was fortunate to have a lot of interaction with the first self-made billionaire woman ever in the US. Her name's Meg Whitman, and she got excited about what we're doing. And one of the things that she always tells me is, Josh, it's not about the quality of your last decision. It's about the quality of your next decision. And the reason I think that's so important is you can't always be right. And certainly if you are going to let your missteps and your, errors in judgment and your bad decisions, and if you're going to let that taint your future, you're guaranteed to have a pretty dim one because you're always going to fail. Failure is part of life. And so there's something beautiful. Yes, you want to build on it. So you do want to keep it in mind. But I think that especially when you're going for really big things, in my experience, as you're taking really big shots, which then could lead to really big ups and really big downs, that's where I think the tendency to overthink your old decisions comes into play. And that's the exact wrong thing to do if you're trying to do something big. You got to move on. You got to have a short memory. You got to honor the loss, but then you got to move on to the next win. And that's something that's kept me just having a lot of faith in what's to come and not worrying about what's happened.
Yeah. As you're saying that very sound advice, it reminds me of a quote by Jim Rohn where he said, just because you failed doesn't mean you are a failure. It just means you had a failure and not. We learn from it. And there's a difference between those who rise above it to either label themselves because something happened or they just recognize that was a learning opportunity and I'll be better next time because as you said, now I can see further down the road. I can see around the corner. And so sound and wise. So Josh, thanks so much once again, but appreciate you getting on the call here and looking to the next time that you and I are in this room together.
Yeah, same. It's always great. Thanks, Scott.
All right. Take care, Josh.
See ya.